Okay, we're on. Hey everyone. I hope everyone is doing great. Happy Friday. Yes. Oh, time is going by real quick. I can imagine it was Monday a few days ago and it's like every 2 seconds. It just keeps spinning. So, if you're on, welcome. I'm really excited about today's topic. I'm going to be talking about tax strategies for business owners, and this is specifically because we're getting to that final deadline for taxes, and I feel like for people who have not yet filed or people who did and maybe didn't take advantage of some expenses, this is a good session for you to be a part of. And most importantly too, you can also save this information for later, so it doesn't only have to be for this tax deadline that we have. You can absolutely leverage this information anytime, so don't feel like if you do not get it in now it's a wrap, or if you already filed your taxes and you feel like you missed out on this, you can apply it. You can always go back and amend your taxes, or you can just save it for future use. Okay, I wanted to make sure that I noted some stuff down. You can see I got this little blank envelope, and while I was in another meeting, I just made a few points because I didn't want to miss out anything. So I have 6 points. Let me put my little envelope right here. So I have 6 strategies or 6 things that I want all my business owners to be thinking about as we prepare to wrap up tax season, but not just tax season. As you prepare to wrap up the year, I know we're going to have another session, probably several sessions for year end, but this is information that will always come in handy. Okay, so my very first strategy is for you to make sure that you're writing off all your deductions. I want to explain this because a lot of times people get torn with what should I write off or what shouldn't I write off. So the IRS, right, under code IRC 162, that's what they call that code. The IRS says if a deduction or an expense is ordinary and it is necessary for your business, you write it off, which means if you needed to incur that cost in order for your business to run, write it off. Okay, so you have ordinary expenses like rent, for example, like your phone bill. That's an ordinary expense. You need to use your phone to talk to clients, right? Those are ordinary expenses. But sometimes you can have an expense that is not ordinary to your business, but it is necessary, right? So maybe you had to hire a contractor or a consultant to come in. That might not be something that is ordinary to your business, depending on the kind of business you're in. But if you decided that you wanted to invest in your business and take it to the next level, and you might have to incur a really high charge to bring in this professional, now it's not ordinary, but it is necessary. Okay, so if it is necessary, you write it off. And why I say that is because there's no list that can exhaust every expense that is related to a particular business. So I want you to realize that the options are so many. Don't limit yourself. Don't be shy when it comes to it could be a capital expense. So it's something that is a huge investment in your business, something like a building that you need to depreciate over time. That's the only time where you may not write it off in that moment. You can depreciate over time. Okay, but keep in mind and please take advantage of that. The second thing I want to talk about to my business owners, especially for those that work from their homes, is writing off your home expense, your home office expense. A lot of times people don't take that deduction, right? If you're using a part of your home which has been exclusively set aside for your business, please take advantage of that. I need to explain this. So when we talk about home office, people always think, well, I don't have an extra room in my house where, I work from. But they have a designated space, and it doesn't even have to be one space. It could be maybe multiple. Maybe you have a whole corner of your room where you've put your business files, and because they are there, you cannot use that for anything personal. That's part of it. You can calculate it. And then you have another area where you put your desk, and because you have your desk there, that's where you do the work for your business. It cannot serve you for any personal things anymore. Those are all designated exclusively for your business. you can add them up. And when you add them up, you're going to be able to write off now things like a portion of your mortgage, a portion of your utility. If you're renting an apartment, a portion of your rent, a portion of anything, any home expense that you have to pay in order to keep the upkeep of your house. And you're also able to have your office in your house. Okay, you can apply it to based on that space. So if, let's say, if you added the 2 spaces, and or if it's just one, if it's just a room, whatever it is, you divide it by the total square footage of your home and you multiply it by all those expenses. So make sure you're taking that deduction. I see a lot of people winging it. Don't throw it away. The IRS has a standard deduction that you can use for your home office as well, and they can allow you to do up to 3 square footage, and it's at $5 per square foot, right? So you're looking at a good $1,500 right there, where even if you didn't know the exact measurements for your home, you can always use that standard one, right? So it's something to think about. You can use that standard rate. You can go up to 300 square foot, but it's $5 per square foot. So definitely something to be deducting. Don't leave that on the table, you guys. My third one for you is for people that had major expenses like machinery, furniture that they bought. You may not want to deduct that in over a period of time through depreciation. So the IRS allows you to write it off expense it in 1 year under this section 179. So what it allows you to do is, if you have a qualifying business expense, right? And this happens where, sometimes you might open a new office and you invest heavily on maybe furniture, for example. Most people will tell you have to depreciate it over time. But under this section 179, you can expense it in one period. Now, you want to make sure that that property qualifies, so make sure you're talking to your tax person. And this is great for someone who made a lot of money this year, has a really profitable business this year, and you just want to make sure that you're reducing your tax liability, okay? So I don't want you to miss out on that. If you had any of those kind of investments that qualify, please make sure you write it off, okay? The fourth one I have for you guys is your education credit. Now, I know there are so many business people I know that go for conferences, that attend different events, and they always forget to write it off. If you're one of those people, any expenses you incurred for education or different trainings, please don't leave that on the table. Write it off. And this is also an encouragement for the business owners that don't go for conferences. Please challenge yourself to go for conferences. Challenge yourself to go for a lot of these educational programs, because you're able to write that off as a business expense, but it also advances you as a business owner, because you learn a lot of things, and it really helps you to take your business off the ground to the next level, okay? I think I'm on the fourth one. My fifth one is, please make sure that you are taking advantage of the available business credits that are applicable to your business. There's so many business credits. There's a business credit for research and development. There's a business credit for, there's one called the Work Opportunity Zone, where if you hire people from a specific demographic, I think it's a specific area as well, you do get some tax credits for that. There's tax credits for like the small business insurance that you can get as well. So you want to make sure that you're leveraging some of these credits in your taxes. Don't leave them on the table. If you qualify, please take advantage of them, okay? If you qualify for any of these, please take advantage. Let me make sure I'm not missing anything. So yes, so if you had any of these, if you hired people that work, I'm trying to see what would be a good, maybe it's from a targeted group, right? If you hired people in a specific targeted group, you're able to get that work opportunity tax credit. So if you qualify, please take advantage, okay? My last tip for you guys, which I don't want you to forget, is the net operating loss. If you had any losses last year, I see so many business owners, they forget that you can carry your loss forward. If you had any losses last year and this year your business is profitable, you can carry it forward to this year. And if your business has a loss this year, you can also carry that loss forward up to 20 years. In fact, pretty much indefinitely, right? So if you had any net operating loss from last year, make sure you're applying it to this year. And if you have any now, if let's say you're operating at a loss, make sure that in the future years you continue to carry that loss even when you become profitable, because it will help to save you from paying taxes on profits that could be reduced by losses from prior years, okay? Now, these are some of my tips that I want you guys to kind of keep in mind as we finalize tax season. But I don't want to leave without, giving you something as we go forward, right? Some people have already filed their taxes, so this video, won't really matter much when it comes to taxes, but it's information that you can save for later. So because of that, I'm going to touch on a few things as we go forward. These are some things I want you to start thinking about, okay? I said 6 strategies, and I think I have 4 for this, okay? The first one I want you to do is to consider your business structure or your business entity. Which means if you are becoming very profitable, you might be in a structure that is making you pay more in taxes, you want to consider making an election. If you're not yet registered, I know a lot of people that are operating like sole proprietors. If you're a sole proprietor, for example, and you want to really position yourself to leverage certain tax strategies, this will be a good time for you to consider registering your business, but not only for the taxes, but for the protection. Because when you operate as a sole proprietor, which means you do not have a legal entity like an LLC, a corporation, or a partnership, a multi-member LLC, you're exposing yourself to a risk where if someone were to sue you, they can come after everything you own personally and that of your spouse. So if you set up your business as like an LLC, for example, or even a corporation, you're protecting it, okay? And also when you set up as an LLC, even if there are certain limitations when it comes to tax write-offs or certain tax savings, it gives you flexibility to make elections. As a sole proprietor, you cannot make an election. You have to be set up as an LLC to even make certain elections, like the S Corp, for example, okay? So this is a good time for you to really examine. Maybe you have a business entity that you're not using. This might be a good time to think about shutting it down. Maybe you have brought on a partner and you guys have not really set up yourselves as a partnership. You want to make sure that's done appropriately. Or maybe you started out as a partnership and your partner is not showing up, they're not contributing, they're not doing anything. You might want to consider making a change for your entity, maybe making an election, or maybe completely changing how you are being recognized by the IRS, okay? These are things that I would advise that you do sit with someone and have a conversation about. So that's my first thing in going forward. Reconsider your entity. Second thing I want you to do is to consider tax advantage retirement accounts, okay? As a business owner, you're no longer working for a company, you're working for yourself, which means nobody is putting money aside for your retirement. This is a good time to start thinking about that. And a lot of retirement accounts are also tax deductible. They help you save on taxes. So you want to start getting some input on that. Seek out some good information and set up one that will help you not only to prepare for retirement, but to save on taxes, okay? The third thing is start to consider things like HSA accounts, those health saving accounts. They are great. One thing, because if you ever fall sick, you do have money to spend, but also because those are all pre-tax dollars. And so it helps you on saving taxes on a chunk of money that you can put towards your HSA account, okay? My last one for you, if you haven't hired your family members in your business, this is definitely a good time to think about that. But you want to do it right, especially if you have kids that are under the age of 18 and they can actively support your business by providing certain services. It's a great tax strategy so long as you don't pay them over the standard deduction, and depending on how your business is set up, you can pay them and not have to issue them a 1099 or a W-2, okay? Just things for you to think about. Here, you can call our office or you can go online and book an appointment. But I want you guys to thrive. My goal is to see every business, especially in our community, not just surviving but thriving, okay? Not just making money but saving on taxes, building legacies for yourself, making great investments, okay? So if you have any questions, feel free to reach out to me. I'm always happy to answer, and I'll probably do even more lives as you guys send me questions. Next week, is it next week, Monday? Yes, I'm going to be talking about tax strategies for real estate investors. If you can make it, please do. And here's my thing. Everybody can be a real estate investor. This is not a real estate agent. Anyone. So long as you can buy a property and rent it out, you are a real estate investor. So come and let's talk about the amazing strategies that are available for real estate investors or people who are thinking about owning properties and renting it out. It is my belief that the tax code was set up for business owners and real estate investors. period. Any other person you can survive, all right? So I want to make sure that we're talking about this. I want you to understand the best ways to go into real estate investments. And if you're still to file your taxes, I want you to understand the different options that you have as a real estate investor, depending on how involved you were. Let's talk about that. I hope to see you guys on Monday. Do not miss that session, okay? I'm really excited. If you love this, I want to hear more from you guys. I want to do more of these. I'll make sure that they are pre-scheduled, so those that want to attend will know what I'll be talking about. Non-profit taxes are coming up in November. I'm going to have a lot of live sessions for non-profits as well, and how to leverage their taxes as a funding tool and all of that, okay? Thank you all for watching the video. If you don't have a solid CPA or tax person on your side, we'll be happy to welcome you at the ARC. You guys have a beautiful Friday. Enjoy your weekend. Drink responsibly and stay out of trouble. All right, your favorite CPA over here. I'm Dr. Lily Binglow. Bye.